Hello and welcome to our market alert video for today, which is December 20, 2024. And boy, do we have a lot to talk about today. Before we get going, I am your CEO and founder of Retirement Planners of America. And as you guys know, our goal is to create as many SCWPS as we possibly can. And if you don't know what SCWPS is by now, then I'll tell you. SCWPS is the acronym for Second Childhood Without Parental Supervision. So if you go to our website, it's rpoa.com. And when you're there, you can attend our seminars. You can visit with a retirement planner. We got lots of resources there available just for you. If you're over 50, it's all free. Okay, so before we get going on the economic news and the government shutdown and all that, and as I record this, there's no resolution to that yet. I want to go off on a rant, I guess, and the rant is, what is it with threatening people, senators and Congress people and representatives with you're not going to be able to go home for Christmas if you don't vote for this? I mean, what other, do they do that with the Marines? Do you tell the Marines, hey guys, I know that, they're invading our country right now. And the Marines go, well, yeah, but we're going to go home for the Christmas break. Or how about a fireman or a firewoman, that there's a building on fire, but no, we're not going to go there because we have to go on Christmas break. I mean, I can't believe that is actually a bona fide threat for our government, that if you don't pass this thing before, a certain date, guess what? You're not going to go home for Christmas. To me, you signed up for that. You tell your family, there are times when this is what's going to happen. I'm not going to be able to be home for Christmas because it's important legislation and the country needs me. It drives me crazy. In our small microcosm of the world, our investment oversight, certainly not as important as the government shutdown and all that, but to us, very important. You're our client. Our clients are extremely important to us. I remember when the U.S. debt was downgraded. It was on a Friday night. This was a few years ago, maybe before some of you may even remember. But yeah, they downgraded the U.S. debt. We called an emergency investment oversight committee meeting on Friday night. And we went to the office and we were there till midnight. And our concern was, okay, the U.S. debt just got downgraded. What's going to happen on Monday when the market opens? What should we do to protect our clients from the repercussions of this huge deal? The U.S. debt just got downgraded. So in our world, we don't take a Christmas vacation and say, well, I'm sorry, the market's crashing, but we're on vacation. We're on Christmas holiday, so we're not going to do anything. No, it just blows my mind. So sorry for the rant. So anyway, let's look at what happened this week. And of course, the big news was the Federal Reserve, and they did, as projected, lower interest rates by 0.25%. And, and the market went down 3% on that news. And it's like, well, okay, everybody knew they were going to do that. They did exactly what everybody thought. And yet, here we go. The market goes down 3%. Why on earth? Well, because it's not what they did, but it's what he said. It's kind of like the market goes down 3%. He goes home and tells his wife, is it something I said? Yes, it's something you said. So what did he say? Well, basically, he said that the rate of reduction in inflation is slower than they thought it would be. And therefore, they think that next year, instead of the 4 rate cuts that they were projecting they were going to do, now they're thinking it might be 2. So that therefore means that inflation is not coming down as fast as people thought. Now, if you guys watch this video, you know that we told you inflation is not coming down as fast as people think. So that's why you need to watch this video every week and never miss it. And by the way, I'm still in bed. If you're wondering what this background is, I had my knee replacement and I was an idiot, I admit it, and it swelled up. And so now I'm relegated. I'm in prison for 2 weeks. I'm not allowed to leave bed. My leg's elevated to drain my knee. So that's why this. But anyway, back to what we were talking about. So the Fed basically, and then he said, so first of all, inflation is not coming down as fast. Secondly, now we don't project lowering interest rates as much as we were going to, maybe 2 times instead of the 4 that we were projecting. But to make things worse, he said that the decision to lower rates this time was even contentious. There were a lot of people on the committee that didn't even want to do it this time. And so it's like the Fed, okay, so inflation is not coming down as fast as we want it to. So therefore, we're going to lower interest rates anyway when that is inflationary. And we had a lot of dissension on the committee as to whether we're going to do that or not. And now so basically, they don't know what the heck they're doing. And that scared the market. And so people said, you know what, we've had a good year so far. Let's take our profits and let's go home. That's our view of this. So we have to step away from the mess, step away from the government shutdown as well, because as I record this, as I said, I don't know what happened, and it may be that it's averted, probably will be. Be that as it may, we step away and we look at the forest, not the trees. So if we look at housing and we look at employment, they're both coming down. And they've steadily done so for several months now. The economy is slowing. Inflation will come down. As we said, it's going to peak here maybe in this month or in January and start to trend downward in our view towards the second half, the second half of the year or towards June. Now, that being the case, the Fed will then be lowering interest rates, and what will happen is the market will be very happy with that news. And so we could see a lot of buying on the back of that. In addition, probably what's going to happen is that Trump is going to get the his taxes that expire this year made either extended or made permanent. That'll be well received. And the economy is not in a bad, terrible place right now. It's okay. So overall, our forecast is that this was all a tempest in a teapot. It was an overreaction, probably profit taking, to the Fed basically is telling us they don't know what the heck they're doing. And every forecast they've given us has been wrong. It's crazy how bad they have been at it. But now they're saying they're going to be data dependent, which I wish they would be, and stop with the forecasting. Because now they've said it's going to be 2. Well, if it's not 2, then people are going to freak out when they said it was 4, and now it's 2. They did freak out. Stop with the forecasting. You're terrible at it, and just be data dependent and let the data tell you which way to go, which in the end is what they're going to do anyway. So stop being a soothsayer. So that's our view on it. So where do we go from here? The important thing, in our view, and because we work primarily with people who are over 50, who are retired or retiring soon, our firm, our goal is to protect your retirement, to have your money last as long as you do. And so regardless of what we think is going to happen, the market has a way of making everybody look stupid in short order, and has done so many, many times. And so what we always want to do is have a strategy to protect our clients' money in the event of a big, bad downturn. Because inflation, you can beat that in our view by investing accordingly. But if you don't have a plan to address a big drop in the market, then you're going to suffer like many people, we think you'll suffer like many people did in Y2K, where the market went down 50%, the S&P did, and in 2008, where it went down 57%. Think about taking a loss like that in a short order. It happened quickly, 4 to 6 months. It was terrible and, just relentless. So if that happened to you, would you be able to still retire? Would you be able to enjoy the lifestyle that you want going forward? The chances are that you could not. And so we want to protect against that. And in our firm, we believe that you should invest, yes, but you should also protect. You should have a strategy to get out. And we do. Our strategy said to sell in November of 2007, literally a year before Lehman collapsed, and the bottom of the market happened after that. So we were way ahead of the curve on that one. And the day before the pandemic was announced, our signal said to sell. So protecting principal, if you're over 50, in our view, is a very, very important part. Growth is important, but protection of principal is even more important. So thank you for watching this video. Thank you for enduring my rant. Thank you for enduring my a lack of formality here in this video, but I'm being a good boy, and we'll talk soon.